Hello and welcome everyone. This is Michael Venezia. I'm the head of the equity trading division here at Tradeview Markets. And this is one of my educational videos, and actually my team going over what I had to do in the week, and I actually do them on Monday mornings. I have my team prepared for me that they wanted me to do an educational video on earnings. And it's one of my favorite topics. I mean, you have stocks that are moving wildly and volatile and a great price action, range and volume. All our key attributes always to looking at a good trade, especially with a lot of stocks this particular week with a lot of earnings moving. But you know what? I'm sorry, guys. I'm going to have to veto this, but I was in a situation on Friday, and bottom line is, let me digress. This topic is going to be on swing trading. A little bit more advanced at this level than maybe my team would like me to do, but I was involved in a trade, a swing trade if you will, on Friday that I think is worth noting, and I'm in a little piece of it now, and I'm going to tell you why I was in it and what happened, what you look for in a swing trade. What is a swing trade? It is an ambiguous term. Some people think a swing trade is predicated upon one particular stock. I beg to differ. I mean, if you're going to swing trade a particular stock, it's usually a contra trade, because a swing trade is something you're usually looking for either to have a base, a move, and then some sort of change in trend, like a swing trade. It swings to a different type of trend. You know, but it's a fine line between swing trading and contra trading. Swing trading to me is focusing on a group sector that has been volatile, beaten down, or on the other side, parabolic, on the upside, if you will. You know what? The reason why I wanted to do this is because out of all the videos I do, either educational or daily webcasts, you know, not to be redundant, but you see it's been working, is that in order to enter a trade, we look for good range, price action, and most importantly, volume. Now, range, let me digress again. Suppose Bank of America comes out with a secondary. I mean, Bank of America is, you know, in the teens, and it might do a 20 million share print on the secondary, and it might have huge volume, but it doesn't have, you know, it doesn't have a big range because of that big print, and it has to get washed out, and everybody fills back and forth, and might make a move after that, but you know, that's not a good example of a stock with range. Price action. Okay, let's talk about price action before we get into the swing trading aspect. Maybe I don't really get into what I consider these definitions of these three criteria. Volume tells the story. I'm not even going to get into that, but I mean, you can break it down there. Okay, price action. Suppose IBM has earnings, IBM being a $160 stock, and it's down $7. Now, good price action to me is not when IBM rallies to down $2, then is down $4 and $5. Good price action to me is when the futures rally or go down, the subsequent stock at hand also reacts accordingly. For example, if the futures, if IBM is down $7, if you will, and the S&P minis, or any technology-related stocks that would normally bring up the sector and/or group, or specifically IBM, rally, IBM doesn't rally, or that being a $100 stock rallies a quarter, or maybe even half a point, I consider that good price action. But getting back to swing trading, all these three major rules or criteria apply. Now, what everybody wants to look for in a swing trade is it to, you know, get the consolidation, a base, volume. You know, usually in a group sector swing trade, there is rotation in the market as well. It's giving you an indicator of why you should even be looking at that sector to begin with. Swing trading groups are commodity groups, oils, technology stocks, banks. You know, I wouldn't necessarily take a couple of stocks, you know, like Herbalife and Nu Skin, and you know, which people consider them to go together, for lack of a better term. You know, if those two base, I wouldn't really, you know, put much credence in the swing trade here. But what happened to me, you know, I had something happen to me on this particular Friday, of course today being Monday, that reminded me of the old days. It wasn't really a contra trade. It's just that you want to be able to build positions keeping in mind that when you're swing trading, you're usually trying to pick some sort of change in trend. So I want everybody to realize that entry points are key. And by the way, it's not the sexiest way to build a position, but when you're trying to catch a swing trade, if you will, you want to start small, because the first thing I'm going to tell everybody is you're going to be wrong before you're going to be right. And for everybody that thinks they could time the market, catch tops or bottoms, I at one point thought that way. From the inception of my career back in the late 90s, that's what I did. I started trading in 1996, so that's been almost 19 years. But it only feels like 40, so it doesn't really matter. But let me talk about this particular type of swing trade, and I'm going to talk about gold. Now, let me give a little story leading up to gold, and this will be, I'll edify this on the chart. Gold is making 5-year lows. You know, for all our international clients, a lot of you like to trade gold, and understandably so. I understand. It's kind of an FX related category. You can play against it, and I completely understand. So with that being said, is gold is making a 5-year low. The market, until about, I would say, a week ago, was in an uptrend, making multi-year highs. The dollar has been very, very strong at multi-year highs, for lack of a better term. It has a couple of pullbacks, but when you look at the chart, you'll see. So, keeping in mind for a swing trade, there are several factors that have to work for you to enter it. It's not just like, I think this sector is beaten down or parabolic, because, that's a guess. You know what, and if you want to start small, if you are going to guess, start small, and if you're going to make on the trade, bravo. Usually in those type of trades, you're going to win probably 3 out of 10 times, and your losers are going to be worse than your winners, believe me. So let me get back to this particular sector right now. I'm going to talk about gold. Here we have GLD. This is the 1-year chart right here, GLD. Everybody knows what it's doing. Once again, let me go back to the 5-year chart from 190 to 100. There's the volume bar right here. But let's go back to the 1 year. Keeping in mind that the SPYs on this particular day had a bad day with nice volume. So keeping in mind also that the market on this particular day, the SPYs were down, $2, the Indu being down 160 points. But you know what? That's not panic selling to me, because if you look at the VIX is still way below. The VIX was at $22 in the first week of July, and the market is basically higher where there was. So there's a little bit of fear taken out of the market. So we can also gauge that. But the SPYs on this day were down. The market was down about 160 points. The SPYs were down 2. It was a couple of earnings reports. So we have to remember this. But let's go back to GLD. Now, this is what happened to GLD on the close. This gap down right here a week ago was China selling gold very heavily. It was actually not only an economic story, it was almost a pop culture story about what gold has been doing, because the stock breaking down like this, that broke the bottom, something that we were short a little bit, but the dollar was getting a little bit weaker. So let me go back to the gold swing trade. Here we go. This is the GLD on this particular day. Now, keeping in mind the chart, 103.44 is the low on the day. Gold, once again, making 5-year lows, 103.44 being the low. So now, going back to the SPYs on this particular day, I'm watching the market. The market had a weak day, selling off very nicely with good price range in action and volume. That's what you want. A little dip, nice consolidation. A trend line, broke it a little bit, broke it down again. So here's gold from 2 o'clock till 4 o'clock. Getting back to GLD on this particular day. Okay, so gold, you can say it might have reached the multi-year low at 103.44, showed a pop to 103.98, then up until 12 to 1 o'clock was slightly down a little bit at let's call it 104. Okay, now the reason why I paid attention to gold here is not because it was getting killed or something that I want to look at to buy, it was irrelevant what this group was. It could have been the oil, it could have been the oil service sector, the OIH. It could have been the semis. But GLD here, and once again, I want everybody to keep in mind it was irrelevant that it had volume. As of 1 o'clock, the GLD had 100% volume. Now, a stock with 100, or ETF with 100% volume, at that time of the day, with the dollar getting weaker and the market down quite nicely, and some would think they would technically break, you know, the market wasn't down 500, so there were buyers out there, and they were rotating slightly. So as of 1 o'clock, GLD had 100% volume. Let's look at the reverse ETFs, NUGT. NUGT was down, the close of the day was 342, 311, had 100% volume. As you can see later in the day, it had one of its biggest up days it's had literally, I would say, in 6 months. So I kept note of that. Then what I did for the swing trade is I went for the best of breed. I went to look at Newmont Mining, which based the same time, 1 o'clock, right here. It went from 1239 to 18. But I went into stocks, I went into the rest of the groups. I went into GG, which by 1 o'clock had 100% volume, and gold looked like it wanted to bounce. So I started building a position around 1 o'clock, remembering that I'm going to be wrong before I'm going to be right, and my entry points here are key. So at 1244, you see actually gold did make its biggest move, or its pop-up with volume. Right there, gold had about 120% volume, GLD. It broke that nice up bar here. It took a little bit time to relax, that second little bar right here, and then gold went from 104.42 to 105.60 on great volume, taking out, I would say, 2-week highs, 2-week lows, if you will, 2-week lows, and settled right at a level right here, 105.46. And what happens today is yet to be determined. I did take half off my position. I took it off right over here at the close. It was a weekend, so I wasn't really confident in the trade. I didn't think this was going to be a V-type reversal, like this type of situation here with volume, because this was not off the lows. So what I did was, when my stocks started to work, I started to buy the others. I started to buy ABX, which, by the way, had 100% volume. Now, it was still down on the day, but it was spiking on my volume indicators. So ABX, although we're not going to get rich, but by the way, this stock traded 50 million shares, 41 million shares. So you could buy 100,000, ABX right here. I don't know what your line is or what your leverage is, but a stock that goes from 686 to 728 is a very good position, and especially NUGT, which traded 80 million. You could buy as much as you want, wherever it is, 312, 321, 312 to 378 is a monstrous move. As you can see here, NUGT was up 10% on the day, but that's from unchanged. If you had it from a lot lower out here, that was a very good trade. Now with the swing trades, when do you know if you want to hold it, or when if you want, if you want to buy it? A lot can be predicated upon market conditions. Once again, let's look at the SPYs. So, I'm not really sure if this is what they call the flight to safety. Once again, a lot of people still want to take, it could be short covering, I'm not sure, but definitely I was encouraged by the action in GLD, and it's yet to be determined if I want to go back in the trade. As a matter of fact, I have some shorts overnight, the market looking down. Shanghai was down 8% this particular night, so I actually had a couple of good shorts, but what bothered me, or what I was sleepless, once again, for lack of a better term, overnight, was I really didn't want gold to open up nicely, because I was only in 10% of my position, but I didn't want to leave a lot of money on the table, because this type of trade, I will admit that I took the money because I'm not really familiar with the gold type of swing trade here, because it is very geopolitically related with the dollar and with the Fed, with the fear of the Fed raising interest rates. It's not really my trade. Once again, I got into it because A, I'm a professional and I follow it, but it was all over my volume indicators. Once again, GLD at about 12 o'clock, 1 o'clock had 100% volume, and they wanted to look to turn, and they were hopping up all over the volume indicators. So anyway, that's an indication of my volume indicator. So with that being said is, this educational video on swing trading is just like any other trade. It goes upon price, action, volume, and range. I'm not sure yet if I'm going to buy gold on any dips. Gold right now is not looking any higher, which it should be, but it did make a nice move. So right now gold is unchanged going into Monday morning. We'll see if it dips a little bit. Certainly if it takes out new lows, the trade's over, because then there are more sellers than there could be buyers, and people like myself looking to sell as well. So I want everybody to keep in mind with swing trading a couple of criteria to remember. First of all, the selection of the group is not really that important. Your entry points are more important, because you're timing something that's going against the trend and going something that has a little bit of a, it could go either way, which why the swing trade pays off so well. People like them. So also remember, you're going to be wrong before you're going to be right. Always keep your ego aside. With these type of trades, they pay very well. And what I usually do is I take off pieces. And if I really believe in the position or the positions, I will sell on the way up. I'll buy pieces on the way down, granted that they don't retrace 30 to 40% or 50% of that move, which it shouldn't. So until then, please keep in tune for the rest of the educational videos. I'll be doing about one a week. Please also sign on to my Twitter account or go on tvmtrader.com or tvmarkets.com. My email address is there for anybody who wants to talk about any particular topics or have any questions. I understand. So with that being said, everybody, continue to trade well and keep doing your homework. Thank you.